Good afternoon. Welcome to the American Bankers Association webinar, Staying Competitive, Social Selling plus Paid Social Advertising. My name is Justin Gall and I work in the Endorsed Solutions group here at the ABA. We are excited to have endorsed partner Denim Social present today's webinar. Denim Social enables banks to compliantly engage with customers on social media, build deeper relationships with their communities, and close more deals. Denim Social offers organizational tools to streamline social media marketing campaigns, saving users time and money with a platform that integrates social media channels, content, and analytics into one central dashboard. Denim Social is the only ABA-endorsed social media platform for banks and financial institutions. We will get started in just a moment on the program, but before we begin, let me run through some administrative items. All phones have been muted for the duration of the webinar. The presentation will run approximately 45 minutes and there will be a Q&A session following. If you have any questions at any point, please send them using the Q&A message area on the left-hand side of your screen. To send a question, simply type a message in the Q&A box. We will try to answer all your questions at the end of the presentation, but if we can't answer all your questions in the allotted time, we can get back to you after the webinar is ended. Finally, please note that this webinar is being recorded and a link to the recording will be sent to all attendees in the next few days. Joining me today is Doug Wilbur, CEO of Denim Social. Doug leads the creation, development, and execution of the company's long-term vision and strategy. A financial services veteran, Doug previously served as President, North America for Assembly Payments, where he oversaw all sales, marketing, and operational efforts for the region. Prior to that, Doug was Chief Revenue Officer for Payments.com, where he oversaw all business development, financial forecasting, operations, and marketing functions. Doug has additionally held numerous product and partnership development roles at Discover Financial Services and was a consultant at Market Platform Dynamics, a leading macroeconomic advisory financial services firm. Outside of Denim Social, Doug mentors numerous early-stage companies via his role at 630 FinTech Accelerator in St. Louis. Thank you for joining us today, Doug. The floor is all yours.
Justin, thank you for the kind introduction. Again, my name is Doug Wilbur. I'm the CEO of Denim Social. And the conversation for today is incredibly timely. Why is that? Well, it's pretty tough out there, folks, especially if you are a mortgage lender. Rates are up, as we all know. Home prices continue to be very high. And what's happening as a result of that is applications are down, aka it's becoming much more competitive to be able to drive net new loan applications. And we're not just, centered only around the mortgage industry. Across the board, it's becoming more and more difficult to be able to engage with net new customer opportunities because of the macroeconomic environment that we're operating in. And on top of that, consumer expectations have changed. We are now entering a period of time where millennials are the vast majority of today's homebuyers. And millennials have very different expectations than generations who preceded them. First and foremost, they want to have a very personalized, customized approach, which does not always lend itself very well to the way that many financial services firms have gone to market in the past. And what it really means is that your loan officers, your wealth advisors, your business bankers, your small business bankers need to be able to one-to-one engage with their customers. And specifically for today, we're going to zero in on potential home buyers and borrowers. As a result, and I had mentioned this on the last slide, a lot of folks are taking themselves out of the market because rates are high, inventory is low, and as a result, the prices are just unattainable for so many consumers. They're taking themselves out of the market. On top of that, consumers or lenders on average have not done the best job of retaining customer relationships, especially coming out of the previous economic environment that we were operating in, where rates were low and almost any consumer could refinance and have a transaction with a loan officer. So many loan officers actually didn't have to worry about building a sales funnel and building a sales pipeline. But this really matters. Building relationships with consumers really matters. On average, consumers will take out about 11 mortgages over the course of their lifetime, between their starter home and refinancing and moving to a bigger home, potentially having a vacation property or a rental property. And on average, still, consumers 92% of the time Borrowers want to work with one of the first two lenders that they speak with. First two. So just being present in the communities that you serve will generate net new opportunities. We'll get into how social media weaves its way into that strategy. And then from a retention perspective, only about 18% of lenders retain their customer base because they haven't historically done a good job of building a relationship, which is the expectation of the next generation of home buyers. So when every edge matters, it's time to level up your social media game. And these are two strategies working together. So, and we're going to unpack this together this afternoon. One strategy is the notion of social selling, or being actively engaged on social media with the communities that you serve as a lender, but coupling that together and reaching beyond your first degree connections on social media and leveraging hyper-targeted and relevant promoted content or social media advertising at scale. These two strategies working in concert with each other will give your lenders the competitive advantage that they're looking for. So why should we harness the power of our loan officers and the networks of our loan officers? Well, activating loan officers on social media will have a positive net impact on your bottom line. On average, employees have about 10x the following on social than the brands they work for. And every time they post on social media, they're going to drive about 2x the engagement. So if you think about that multiplied by the number of your loan officers, the ability to amplify the reach of your marketing efforts is huge as compared to just thinking about marketing efforts at the brand level alone. And so this matters, guys. 45% of the time, sales reps who are active on social media are going to hit their quota. And 57% of the time, they are going to be more likely to generate high quality leads. So being active on social media really matters. And the combination of organic and paid social media advertising is really important right now. And our customers, our 250 some odd financial services firms who are active on our platform today, are using the combination of social media publishing and social media advertising. They're doing so to be able to increase the reach and making sure that they are reaching the right audience with relevant content. They're able to use social media advertising to seek out net new relationships, and then ultimately using social media to convert engagement into new business opportunities. So maybe take a step back for a second. I know a lot of folks are probably hearing me use the word social selling, and could you maybe use just a quick definition opportunity? So what is social selling? Social selling is the act or the practice of leveraging social media to sell a product or a service. It's very typically involved with harnessing the collective reach and horsepower of your customer-facing producers to give them the ability to build trusted relationships that ultimately lead to more engagement and then ultimately net new applications for loans. And so here's a quick snapshot of how it works in action. So social selling in action would be a loan officer posting relevant content on his or her social channels, building and deepening these relationships with the help of paid social media advertising and reaching beyond their first degree connections, and then ultimately creating a digital journey that can convert by driving a click to a personalized landing page, and then ultimately the engagement on that landing page, driving that straight into your CRM, where you can manage and maintain those relationships centrally. So thinking beyond organic social media is the best way to stay relevant in a hyper-competitive market like we're in. Organic social media, while very important for establishing trust and credibility and establishing opportunities for thought leadership, organic content does have its limitations. The reach is limited to the number of first-degree connections that your loan officers have. Algorithmically, many of the social networks won't make it possible for all of an individual loan officers to see that content. Getting folks to follow you on social media is a challenge in of itself. And it does take a long-term commitment to be as engaging as possible and to think about the type of content that's really going to resonate with your audience over the long term. However, I mean, it is very much important. I don't want to, take the foot off the gas pedal here and say that social publishing on social isn't important. It very much is, but coupling it together with paid social advertising, where the connections are endless, you ultimately have control over the targeting. You can choose your audiences that matter most to you. And because of the way that we can report on metrics, you can very quickly see what's working, what's not working, and make the necessary adjustments. So going deeper into the communities that we serve, why is that important? Why is reaching beyond the first degree connections that a loan officer has so vitally important? Well, there's a handful of stats on the page here. I'll just rattle off a few of the most important ones, the ones I think are most interesting. 27% of consumers said that they would actually buy something off of a social media ad. Now, I recognize that that's not necessarily going to be as relevant for the financial services industry. This is across the entire internet, so to speak. But suffice it to say that driving engagement, especially with really relevant and targeted creative, will drive engagement. There just the scale alone on social media, on the ability to reach consumers, where they are spending the vast majority of their time. So you can see here, users on average spend about 28 minutes a day on Instagram alone. So there's no better platform for directing your social media advertising or your digital advertising dollars than specifically to social media, and then directing that ad spend specifically to your loan officers so they can build net new relationships. This is another graphic of how this works. Your first degree connections on social and being able to reach them and engage with them on social by organically posting on social, but breaking through with advertising, breaking through and building the ability to hyper target within the communities that you serve is really what we're talking about here and where the major opportunity is for your loan officers. Here's another way to look at the opportunity when it comes to thinking about organic and paid social working together. When we talk with our customers about how to develop social selling strategies and social selling campaigns, we very, very often refer to the social media conversion funnel. Using social media publishing to drive awareness at the very top of the funnel, establish expertise and credibility and thought leadership, using social media advertising to drive engagement in a very targeted way, using our landing page solution to be able to generate high quality leads and ultimately drive consideration for your products and services. And then ultimately, because we all know this as consumers, we don't necessarily fill out a landing page the first time we head to, or first time we click. It takes a few times, and sometimes it takes many times. So the ability to retarget with those folks who have engaged, who we know that are in the consideration phase, to really drive that conversion with retargeting, driving folks deeper and deeper through the sales funnel with a combination of social publishing and social advertising. So with a social selling strategy coupled together with paid social, your loan officers can use social media to close more deals. And now I think, Justin, if I'm correct, we're going to open up the floor to some questions. I saw a bunch flying in here throughout the presentation today.
Yes, we do have a number of questions that have come in. The first one I do want to address myself. The question was, is this webcast going to be available after this event? And yes, we are recording this and it will be emailed to all attendees in the next few days. So I'll be on the lookout for that. So there is a recording. But the first question for you, Doug, is our loan officers are very busy. How do we get them engaged with social media?
Totally. And we hear that across the board, especially now when they're so busy fighting for every net new loan opportunity. The key to our platform and how our customers are tackling this is that we're really not asking the loan officers in many situations to really do anything other than link their social media handles to Denim Social. And once they've done that, we've then empowered the marketing teams to be able to create, schedule, and publish content on their behalf. And by doing so on their behalf, we not only provide, the scale opportunity that we're looking for, where one person's doing the work on behalf of many. You've also significantly de-risked your social selling strategy because you are working in concert with compliance, using our approval workflows, using our keyword moderation, archiving all content, and making sure that you as a marketing leader are working in lockstep with your compliance officers. Because once something leaves your front door, if you don't have strong oversight tied to how you're empowering your loan officers to be active on social and use it as a business development tool, if you don't have tight control over it, you're opening yourself up to not just brand and reputational risk, but like legitimate compliance concerns. So to kind of reiterate the answer to that question, Justin, is, our customers do recognize that their loan officers are very busy. They do recognize that many of them are not marketing professionals by trade. And so they centralize all of that activity and all of that social selling effort to the marketing teams, and the marketing teams use our platform to manage it all and orchestrate it all from one central console.
Okay. The next question is, our banks post all the time, but we don't see too much ROI. Why should we invest in social selling?
Totally. If you think about how so many financial institutions have historically approached social, it is really at that brand level. And we have a saying that, echoes the hallways here at Denim, which is, in our industry, probably more so than any other industry on the planet, people buy from people. That's why we have loan officers. That's why we have financial advisors, small business bankers, insurance agents, et cetera. We have these people in our lives who help us to make more sound financial services decisions as consumers. And so if you want to drive engagement, if you want to drive reach and amplify the reach of your messages, you have to harness the collective horsepower of your employees if you want to drive engagement, because the employees are the ones who, as consumers, are thumbing through their Instagram feed or their Facebook or their LinkedIn. As they're thumbing through those feeds, consumers are much more likely to stop and engage when that content is being presented to them, one, by somebody they know, not a brand, but a human, and when that content is teaching them something and engaging. And so, we very routinely help our customers with these strategies of how do you build out a social media strategy that is not just talking about your product and not just coming from your brand. It needs to come from your employees, and the content that you produce and you distribute needs to help a consumer and educate a consumer, not just sell them a product. So our customers who subscribe to that strategy and that philosophy are the ones, frankly, who are driving significant lift in engagement. And we've got a number of case studies on our website that I'd encourage the listeners to head on over to Denim and to our resources page and check out our case studies about how so many other financial institutions have driven a massive amount of ROI based on the investment that they've put into our platform.
Okay, the next question is, how can we ensure our paid social is reaching the appropriate audience? Right now, we use zip codes to stay within the geographical range of our branches. Are there any other suggestions?
Yeah, Facebook or Meta more broadly makes a number of different targeting criteria available to advertisers. So certainly you want to geo-target, but beyond that, you want to think about other indicators that you could use to target either a first-time home buyer or somebody who's maybe got a life change event going on that would indicate that maybe they're shopping for a larger home. Right? There's a lot of additional targeting criteria, and we actually pull all of that into Denim Social, into our advertising solution. So you're not going natively to Facebook Ad Manager. You're actually using it. You're using a version of Facebook Ad Manager that we've recreated within Denim to make sure that you do have that ability to target beyond just geography, but making sure that you're falling in line with industry best practices from a compliance perspective.
Okay. The next question is, how do I get started with paid social media advertising?
So it's been really interesting. We sent a team out to New York City just a few weeks ago for Social Media Week, and the one of the overarching messages that came back was frankly a philosophical change in the approach to paid advertising on social. The previous approach was really, you kind of have to commit, and you have to really think about scale in order to find success on with social media advertising. The modern philosophy, which we actually subscribe to here at Denim, so it was really reassuring for us to be able to hear others evangelizing the strategy, is look, let's test and learn. You don't need to direct hundreds of thousands of dollars of digital ad spend to social. You can do micro tests, and through Denim Social's advertising solution, you can micro test at the individual LO level, but still manage all of that activity at scale. So it really gives our customers the ability to say, hey, this message is resonating with consumers in New England and maybe not in the Mid-Atlantic. Maybe it's another message that's resonated with consumers in the Mid-Atlantic region. So let's continue to refine our messaging for these other industry or these other regions or geographies or consumers who have a specific set of needs.
Okay, and this next question, I'm really interested to hear the answer. Because of the current economy, is there anything you'd recommend people do differently on social media today than maybe 6 to 12 months ago?
Yeah, look, it's the folks who are, our customers who are invested in this idea of social selling, right? So I have to really let's have a conversation. If anybody wants to get in touch with me and have a deeper conversation around this, I'm happy to at any time. But the way that the economy was working, prior to the correction that we're in right now, it was fish in a barrel, right? So many lenders had too many opportunities. They couldn't get to all of them. And so if anything was happening on social media, it was really just, advertising low rates to try and drive a click. Now that the market is more competitive, consumers are looking for expertise. They're looking for somebody to help them, not just somebody who can get them the lowest rate. Certainly rate is always going to be very important. But because of the market that we're in, giving your loan officers the ability to become, thought leaders, or at the very least to become trusted advisors for their customers by publishing thoughtful and relevant content is really paramount right now. I can't stress it enough that being very thoughtful with the content you're putting out into the marketplace that can be helpful to a customer, not just promoting a product, so to speak, but putting content into or publishing content on social on behalf of your loan officers that will help consumers to make a more sound financial decision. That's what we're seeing more and more of from our customers, and they're using our content engine to do it. So we have a very robust content orchestration engine embedded within Denim Social that gives our customers the ability to source relevant third-party content at scale. So instead of going out and Googling around and trying to find, a story about, XYZ issue, we actually pull all of that content straight into Denim, and we give them the ability to build editorial schedules based on that content that we're sourcing for them, commingling that content with their own first-party content that's being generated by the brand, as well as from other sources. Like, for example, we're integrated with a reviews and reputation management platform called experience.com. And so being able to programmatically pull those reviews for your loan officers and have that social proof that this is a loan officer who actually gets it and who does really deliver results for their clients. That's the type of editorial schedule that we're recommending for our customers. And they're using our platform, from soup to nuts to be able to deliver those strategies.
Okay. The next question kind of goes back to the ROI question that you spoke to earlier. It's how can I convince leadership that paid social advertising is worth the investment?
Sure. I mean, that's another beauty of paid social is you don't have to ask leadership for a massive budget right away. Micro testing and running A/B tests, or in our platform we call those smart campaigns. Testing and learning with small budget dollars is really the best way to convince leadership that more advertising dollars should be warranted in the future, right? I mean, if you just think also like the amount of time that consumers spend on social, the the hours a day that most folks spend on social media, being able to micro test and understand how to drive engagement, and building that business case with the data that you're gleaning, because the data is very rich and robust. So you don't necessarily need to go to leadership and say, I need $100,000, $200,000, $1 million digital ad budget. You can micro test before you go to that and say, we've tested this. These are the messages that are resonating with our customers. This is why we want to double down, because we know that we can drive more engagement, and we can measure that at Denim. So we're not driving a click to some generic loan officer website. We're driving a click to a conversion optimized landing page that we host, and our customers design them one time, but when they are deployed in the marketplace, they're personalized for that loan officer at scale. So we're driving that engagement on a loan officer level at scale, and then ultimately dumping those leads straight into a CRM. We're integrated with a number of different CRMs that we can drive those engagements with, and that data collection straight into the CRM, and giving marketing teams the ability to care and nurture for that lead maybe differently than they would if it came from a direct mail, for example.
Okay, Doug, that's actually there's a couple other questions that were very specific in nature, so we're going to reach out after the webinar to these attendees to answer those questions. But that does it for the balance of the questions, Doug. So I don't know if you have any closing remarks before you hand it back over to me for closing out the webinar.
This was great. Thanks for making the time for us, Justin.
Okay, that is going to wrap it up for today's webinar. I would like to thank Doug for his informative presentation. Also want to thank all of our member banks for joining. If anyone would like more information on the Denim endorsement, please feel free to reach out to the ABA or Denim. Thank you all and have a great day.